Right, traders, welcome back to the channel. Here we have our regular weekly EURUSD and GBPUSD Forex outlooks, right? So quickly in the comments, if there's any other markets or pairs or any other kind of markets, whether it's crypto, Forex, futures, any other markets that people want me to see, just drop your comments below and I'll be more than happy to include them in the channel as well. So again, we have our regular EURUSD outlooks to begin the channel, right? So again, what we have is we want to determine a bias, right? Every week we want to determine a bias in the market. So how are we going to do that, right? So I've said this on basically almost every video. So I've decided to formulate a 4-step plan that I think everybody should use when it comes to determining a bias, right? So what we look at is the 4 basic pillars. So we look at our market structure, or structure for short. We look at our PD arrays. We understand what dealing range we are in. And of course, we want to identify any inefficiencies or fair value gaps. So these are the 4 critical areas we want to look at when it comes to determining a bias in price, right? So again, what we have over here is we have our structure, right? So our structure here is bearish. So again, what we had over here to the left is we had a swing low to the bottom left of your screen. This here was broken, right? So we had the swing low get broken. And since then, we've had bearish structure, right? We've had a bearish structural break to the downside. And so this gives us our overall bearish structure. And the second thing we want to look at is our dealing range. So our dealing range essentially consists of this swing high up here. This is our swing high. And this is our swing low, right? So the swing high and the swing low give us the dealing range to work with, right? So the dealing range, again, we use the Fibonacci tool to then go on to the third rule. So all of these things coincide with each other to help build a bias together. Now we have a structural high up here, like I previously said, and we have a structural low all the way down here. So our structural high is all the way up at 1.255, and our structural low down here is essentially below 1, so 0.954. So again, what we have over here is we have price hovering near the equilibrium, just below the equilibrium. So we are, as you can all understand, below the equilibrium, and therefore we are in a discount. Anything above that, of course, we understand from very basic ICT concepts or even SMC concepts, is premium. So now that we've done step 1, which is structure, step 2, which is the dealing range, step 3, which is the PD arrays, the 4th thing we want to look for is the inefficiencies in price, right? The inefficiencies in price. Now, where are they? Let's quickly have a look, right? So we understand we're looking for fair value gaps, essentially. So what we have over here is we have a fair value gap in price over here, which I'm going to label with a box so people can see. I'm going to highlight the fair value gap just over here. And I'm going to highlight it in blue, like I do on every video. So this here is the inefficiency. Notice how price did come up to fill it, but we have some unfilled inefficiency just over here. So this now becomes a POI. This is now a valid POI, and it's an area of interest or a point of interest, hence we call it a POI. So this is a weekly POI, right? And the reason why it's a POI is simply because it leaves an inefficiency, it's priced in the premium, and it's broken structure. So this now becomes an area of interest or a point of interest, right? Weekly POI. So this POI currently stands at the price point of 1.1514. I'll quickly label that for people so they can see it, right? 1.1514, right? So from here, we need to understand, yes, we're in a discount. So this gives us an automatic ICT kind of perspective that we should be looking for buys, right? Longer term, we're bullish, right? So that doesn't mean we only look for buys, but on the higher time frames, we are higher time frame bullish, right? So longer term, we are bullish, right? Simply put. So now that we have a POI up here at 1.15 roughly, we need to understand what else price has given us, right? So now that we've gone through the 4 basic pillars of price, what we understand is we need to understand from a ideological standpoint, what does the market actually aim to achieve by moving up or down, right? When the markets move up or down, essentially what we have is we have the interbank price delivery algorithm, right? IPDA for short, right? Interbank price delivery algorithm. So for those who have seen some of my previous videos, right, the IPTA or the interbank price delivery algorithm seeks higher or lower prices for 2 reasons only, right? Seeks higher and lower prices. So from here, we're going to be going over the higher prices as we are in a discount. So what does the IPTA actually look to seek, right? It looks to seek 2 things, right? It looks to seek liquidity and it looks to seek inefficiencies or fair value gaps. So these are the 2 things that we are going to be looking for in the markets, right? Liquidity and fair value gaps. And this is exactly what we used to actually build a bias in the first place. So if we come back to live price action, yes, we're near the equilibrium, so we could have a bit of choppiness in price, a bit of ranginess. But again, we have a weak high over here, right? This now is a liquidity pool. This here is a point of buy side liquidity. Now, why is that? Well, simply put, we understand that yes, we've broken structure on the daily time frames, but on the weekly time frame, right, this impulsive move to the downside from July last year to October last year, this bearish impulse over here hasn't actually achieved anything, right? Because remember, the weekly low is all the way down here. So we understand that this is a weak structural high, right? This high is a weak structural high. So this is at the price point 1.1275. 1.1275, and this now becomes a weak structural high, and it becomes the next overall target, right? So if this bullishness does continue beyond the equilibrium, then this now becomes the next target up at, like I said, 1.12753. This is the next upcoming target, and if we do break this level, over here, then this POI becomes the next target, right? So this is a quick weekly outlook. If we head down to the daily time frame, the daily time frame again paints a very similar picture to that of the weekly. So again, what we have the weekly weak high over here. Now, the weekly time frame itself gave us a break of structure down here. So again, quickly going over the four concepts again. We have a structural high, low, high, low, high, and now we've had a break of structure to the downside. So our structural dealing range is bearish, just like the weekly. Our Fibonacci tool can be used from the dealing range swing high down to the dealing range swing low. This gives us our premium and discount. And so from here, we apply the same concepts again. You want to ask yourself, where are the liquidity pools and where are the inefficiencies, right? Just by looking at this chart. So again, what we have is we have a weak structural high over here. Why is it a weak structural high? Because this impulsive move to the downside hasn't actually contributed to any new lows, right? Remember, the daily low is down here, right? So we haven't had any significant, break of structure. On the lower time frames we have, well, on the daily time frame, this remains a weak structural high. Okay. This also has formed a trend line over here. And more importantly, we have a bearish inefficiency over here in the premium, right? Bearish inefficiency in the premium over here. So this now becomes our next target in price, right? Just like that. So this now becomes a target for potential buyers, as well as this liquidity pool over here. So the overall bias going into the next week is for longs, right? Is for buys, because we have buy side liquidity and we have sell side inefficiency to target. So this now corresponds with a weekly time frame to give us an overall higher time frame bias. Now from here, if we head to the GBPUSD weekly time frame, we have, again, these markets are correlated, so we do expect there to be quite a bit of similarity, which we have got, right? So again, what we have it's actually a bit more clearer on GBPUSD, right? So again, we have our bearish structure. If I quickly zoom out in price, we have a bearish structural range, this swing high down to this swing low. So now we're currently literally situated just above the equilibrium. So again, what we've had over here is we've had demand zones or bullish fair value gaps that have been respected, right? So we have a demand zone that's been tapped into over here. We have another demand zone that's been respected over here. So now from here, just like the euro dollar, we have a fair value gap up here. Again, we've left an inefficiency, we've broken structure, and we're priced very firmly in the premium. So this now becomes a area of interest or a point of interest, right? POI. And the simple reason it's a POI is because, yes, we've broken structure. Yes, we've left a fair value gap. And yes, we are in the premium. We're firmly in the premium. So this now gives us our 3 rules to a high probability POI in the financial markets. Now from here, we have a weak structural high over here. And the reason for this weak structural high is because it hasn't made any new lows, right? We've tapped into a demand zone and headed higher, right? So if you want to look at this from a basic structural perspective, this is a weak structural high as it's bounced off 2 demand zones and it hasn't actually contributed to a new weekly low. So from here, the target remains, at least up to this swing, at least up to this weak structural high over here, which is at the price point of 1.313. 1.313 remains the target over here on GBP USD. Again, if we head down to the daily time frame, again, yes, we have bearish structure in terms of the most recent structural range, the dealing range over here. This is a bearish dealing range. But what we've had over here, you need to understand, yes, we had an inefficiency over here in price, right? This was an inefficiency, or a fair value gap just over here. So when you look at price, we've tapped into this fair value gap. Yes, we haven't filled it completely, which is fine, but this is majority mitigated, right? Majority mitigated fair value gap. And so from here, it's the same old principles where, yes, we've had a discounted low. This is a discounted region, hence why we're moving higher. It's not an accident. We're in a discount. We're in the discount of a dealing range, right? This is a discount over here. Let's label that. And so once we're in a discount, we understand that the price will simply move from a discount all the way up here to a premium, right? That's one of the essentials of the market. And it's how the IPTA or the interbank price delivery algorithm works as a whole, right? So now that we understand this, what we have over here is we have a weak structural high all the way up here, right? So this is now a weak structural high because if you look at it, yes, we've headed down, we've broken some minor structure, but again, it remains within its dealing range, and therefore, just like the weekly time frame, this is a weak structural high, right? So the next overall target is a minimum of 1.289, but really, again, we have a fair value gap all the way up here in price. This is a fair value gap in price just over here, and so the overall target becomes 1.31. 1.31 becomes the next overall target, right? So again, using basic concepts, right, of structure, order flow, dealing ranges, liquidity, as well as the IPTA concepts of seeking buy or sell side liquidity along with fair value gaps, allows us to determine a higher time frame bias with a lot of precision and accuracy.